As I look back at 2022, the year seems to have gone quickly for me, even though I know for a lot of people it's been a slow and difficult year. For those in property, it was a roller coaster year where we came to expect the unexpected. We went from this time last year, the Reserve Bank declaring the board is committed to keeping cash rates at this level until 2024, to ending up with eight consecutive interest rate hikes this year. That meant we moved from boom conditions at the beginning of the year driven by ultra-low borrowing costs and strong demand to falling property markets around Australia, with fragmented markets as each state performed differently. So what's ahead for us? What will 2023 bring? That's the question I want to discuss with my guest today, Dr. Nicola Powell, Chief of Research and Economics at Domain. So welcome to today's show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Boy, what a year 2022 has been for property. It's likely it'll be remembered as the year that our housing markets transitioned from that once-in-a-generation property boom we had a couple of years ago into a property downturn. And no one's going to forget the historic succession of interest rate rises that lowered buyers' borrowing capacity, well, by up to 25% in many cases, and forced many aspiring home buyers out of the market, well, at least for the time being. And the rental markets have also been in crisis this year, with a perfect storm of rising interest rates and record low vacancy rates causing rental prices to be hiked nationwide. Now, the question on many people's minds are, what will the property markets look like in 2023? Will they stabilise, or will it be as tumultuous as 2022? That's what I want to ask Dr. Nicola Powell, Chief of Research and Economics at Domain. Nicola is a leading force behind Domain's data reports, and that keeps us in Australia, the Australian public, up to date with what's happening in the market. She's a well-known property expert, featuring regularly in broadcast and print media, as well, of course, as Domain's regular media channels. Hi, Nicola.
Hello. Thanks, Michael, for having me back on.
Nicola, I'd like to get some of your thoughts about the big property trends to watch out for in 2023. But before we do, I'd like to set the scene by discussing what happened to our property markets in 2022. So what were your highlights? What do you think the big property highlights were for 2022?
It's certainly been a significant period of time for our housing markets, and I do think we're all coming out of this with a little bit of whiplash from the ups and downs on what has been a roller coaster in property price. When you think about back to 2021, where we saw 2021 close with house prices recording their steepest annual growth rate on record, then you into 2022. And as you mentioned, we saw the impact of interest rates, and we saw house prices record their fastest quarterly decline on record in 2022. So that's a very relatively short pace of time where we went from the fastest annual rate of growth to then the fastest quarterly decline. And we really have seen a change in our housing markets. And I think what we saw as 2022 unfold is the downturn did gather momentum, and it spread geographically. And initially what we saw was the slowdown was evident as affordability had impacted buyers early in 2022.
So that's right. And affordability was the issue even before interest rates started rising in May, wasn't it?
That's absolutely correct. We were really seeing buyers battling, the headwinds of escalating property prices that occurred in 2021. And so we were starting to see a slowdown overall in demand. And then, as you said, we saw the RBA then go through their most aggressive rate hikes since the early 90s. And that did put a firmer brake on buyer demand and obviously impacted borrowing capacity. And we saw this come out in the level of price growth, and we saw that fastest quarterly decline on record. But I think what was interesting in 2022 is, when we began 2022, we saw overall supply on the market had hit a low. And what we've seen over time is that slowly been building. And I think that is one of the things that also weighs on price, not only the lower borrowing capacity and interest rates and overall consumer sentiment, the level of supply overall that's on the market.
Well, consumer confidence really took a plummet. It slumped to degrees that we haven't seen, not even during the global financial crisis. And it was the continual barrage in the media of messages about inflation. Whole generation have never experienced inflation. And I guess anyone who's invested even in the last decade, Nicola, have not even experienced rising interest rates. So uncertainty and change just confused a lot of people.
I think that's absolutely true. And, consumer sentiment is a really big thing for our housing markets. And many borrowers and potential home buyers had never experienced rate hikes of this magnitude before. And, we saw that jolting impact on consumer sentiment. When you look at the increase that those aggressive rate hikes had from the RBA, and you look at that collective increase, anybody with $1 million home loan, it's added just over $1,700 to the monthly mortgage payment. So this has added thousands and thousands of dollars to the annual cost of holding a home loan. And I think that in itself, now buyers are much more wary in terms of what they commit to when it comes to purchasing a home. They're much more aware of their reduced borrowing capacity. And also I think they've become more used to the fact that this is the environment that we're now in, and we are going to see more interest rate hikes from the RBA, and people are factoring that into their planning decisions.
I think you're right, Nicola, but I also believe that buyers are becoming more cautious. In 2020 and 21, when we had that once-in-a-generation property boom, there was fear of missing out, FOMO. So they took shortcuts, they bought on secondary main roads, they even bought on main roads and in properties that they wouldn't be buying today. So there still has been a shortage of A-grade properties in 2022, and they've sold well, and B-grade properties have still sold okay. It took a bit longer. But when you actually look at the metrics, days on market and vendor discounting, there haven't been a lot of forced sellers, have there? So it's just been a quieter market during 2022.
Yeah, look, I think there is something in that. I do think we've just kind of paused and, allowed ourselves to get comfortable with the overall kind of economic circumstances. I think we've all pulled back in terms of our spending and our savings, we're very mindful of. I think one of the interesting things over 2022 is we did see transactions continue to operate at speed. And that was despite property prices were falling. The time it took to sell a house overall for 2022 was the quickest it had been since 2003. And for
Really?
units, for units, it was the quickest since 2005. So we were still seeing transactions operate at speed. Sometime over 2022, we did see days on market hit a low, and we have started to see it lengthen. But overall, when you compare it either to the 5-year average or that decade average, transactions are operating very quickly in comparison to that historical.
Well, when we look at that boom that we experienced in 2020 and 2021, it was very, very unusual. Every property around Australia increased, and there was close to $3 trillion worth of value added to our property markets. Now, despite all those negative Nellies saying that we've borrowed too much, when you look at the total borrowings of maybe just over $2.2 trillion against what's probably now about $9.6 trillion worth of residential real estate. Overall, the property markets are still pretty healthy. More than half homeowners don't even have a mortgage against their home. But I looked at your statistics on domain.com.au, and it showed that over that boom, the combined capital cities increased in value 33.6%. And now the property values have gone down a little bit, closer to 5%. But that's still a huge growth over the pandemic period of 27%. Those negative Nellies who are worried about real estate Armageddon have been proven wrong again. Nicola, I love a chart you did in one of your blogs on domain.com.au, which showed the history of property cycles, and that there are always ups and downs, and nobody ever suggests that property, or shouldn't suggest property values keep going up, but the upside is much higher and much longer than the shorter downsides.
So we did analysis on Australia's combined capital city house prices over the last 30 years. And we had a look at all of those price cycles, and we looked at the upswing and we looked at the downturn. And what we found were the upswings tend to be longer and steeper than the downturn that unraveled afterwards. And I think, it's really hard, to pick the peak or the trough of the market. But I think, what this really tells us is we need to think about property as that long-term investment. And not so much about timing the market, it's actually time spent in the market that counts. And that's really what this analysis showed is, really need to have that view of that long-term investment. And, as you said, nearly a 34% increase during the upswing across our combined capitals for house prices. The downturn so far has been about almost 5%. But house prices are still 27% higher than what they were compared to that pandemic trough. And, when you compare that to the analysis that we did of that 30 years of price cycles, what that tells us is we're unlikely to see all of that pandemic growth being erased because we've actually never really seen this in house price cycles in Australia ever.
No. And sure, interest rate rises are the highest they've been on record, but there are a lot of other positives. Maybe we could just have a quick talk about that, because I think one of the headwinds, one of the challenges is still going to be further interest rate rises in 2023. How many more, whether it's 1, 2 or 3. But I think a lot of people are suggesting that now inflation is going to peak and interest rate rises, while they're not at the end of the rate rising cycle yet, we're getting there. I think the other big challenge next year is going to be borrowers with fixed rate mortgages who are now going to move to expensive variable rates, so that even if the interest rates the Reserve Bank are giving us don't rise, many borrowers are going to get a de facto rate rise, aren't they? And I think the Reserve Bank recognises this, so it may make them a little bit more cautious.
Yeah, interest rates have really, have shaped our 2022 property market. And while we are expecting interest rates to continue to rise next year, I think, what we've got now towards the end of 2022, we saw that eased pace of rate rises from the RBA. And I think what this tells us is we're probably now past most of those rate hikes. We're still expecting them to rise next year, but I think, 8 back-to-back increases in interest rates, most of them are behind us. I think for 2023, it really will test the serviceability of mortgage holders. As you said, those record low fixed rates secured back in 2021 do begin to expire. But, the majority of the rate hikes are now behind. And, when you have a look at the yield curve and the forecast for interest rates, many banks are now forecasting that interest rates could be cut towards the end of 2023. So, the outlook for interest rates does remain higher, but I think, the impact of cutting interest rates by the end of 2023 and what we're likely to see in terms of the impact on our housing market, it's likely to be a positive. We're expecting property prices at some point to reach a trough over 2023 and then begin to rise at the end of next year. So I bet this time next year, you and I will be discussing the price recovery.
You took the words right out of my mouth. I was being courteous enough to let you finish your sentence, but I'm sure that sometime in the next 12 months, greed will overtake fear, and I'm saying that nicely because it really is greed and fear and consumer confidence that drives our property markets. And the things that are going to be, tailwinds rather than headwinds are the lack of supply, the huge surge in migration, our relatively strong economy. Yes, the Reserve Bank's wanting to slow us down, but anyone who wants a job's got a job. And I think sentiment will change when inflation peaks and interest rate rises peak, as you suggest. So I agree with you that there's a little bit more hurt to come, and no one should try and time the market. So let's have a talk about the trends that you believe home buyers and investors should be watching out for in 2023. What are the 5 big trends you'd like to share with us?
So I think the first one is downturns do tend to be shorter and less severe. So we're property prices to slide early in 2023, but it's very unlikely to erase all of that growth during the pandemic because we've seen such a strong increase in property price.
If I could interrupt for one sec, Nicola, the problem is we're talking about the overall Australian property market, and there isn't one Australian property market. So there's no doubt that certain sectors, particularly the more expensive Sydney and Melbourne properties, have suffered more than other areas. Regional properties are now catching up with the downturn as well. Brisbane took longer to turn down. But when you're talking about overall, it's actually not been so bad, the fall. And isn't it interesting how they're shorter now, the downturns? Is this because of social media and the 24/7 news cycle and expectations changing quickly?
I think it's interesting because when you look across, you're totally right. There are multiple property cycles going on across and within cities and between property types and between price points. So, it's a complex market. And what we tend to see is our bigger capital cities, our more expensive capital cities, Sydney and Melbourne, tend to see greater pullbacks in price. When you have a look at the last downturn in Sydney, house prices fell by almost 14% from their peak to their trough. They've fallen roughly about 8.3% so far from their peak. So we are expecting property prices in Sydney to continue to slide. But I think, when you compare it to the upswing, where we saw a 40.2% increase in house prices in Sydney, so far the downturn is a mere shadow in, comparison to what we saw in the upswing.
In other words, history's repeating itself, and people should be spending more time looking at history than reading forecasts.
And look, I would think one of the other big trends for 2023, and it feeds into this kind of property cycle, I think we're going to see more of a multi-speed market. The thing with a fragmented market and a multi-speed market, it can create opportunities, but you've got to know where those opportunities are. We saw a record price gap between houses and units overall across our combined capital cities. And in many of our cities, they had a record price gap or close to a record. What we're likely to see in 2023 is units are already holding up firmer across our capitals. So we're likely to see that price gap narrow between houses and units. And I think this creates upgrade opportunities for people who want to leap from a unit to a house, but also within price points, within property types. So for example, in houses, we're seeing the upper end of the market lose greater value. Again, that creates that upgrade opportunity for somebody who maybe is in the middle of the detached housing market and they want to take that leap to the next kind of price point. We're seeing that those price points narrow. So I think there will be upgrade opportunities over 2023 for buyers looking in the right areas.
Now, borrowers who've got less borrowing capacity have got to make a decision, Nicola, don't they? Hey, I want to live in that suburb because of the lifestyle, because of the schools, because of the shops, but maybe I can't afford a home. So I think some are going to look for townhouses and apartments, while others are going to say, no, I'll move to the adjoining suburb because I want to have a house. I think that's where some of the forecasts have gone wrong, because if borrowing capacity is dropped by 20-25%, that doesn't mean you have to sell your home 25% less to me because I can't borrow as much. It means that I'm going to have to look elsewhere or look for an apartment. So who's going to buy your property? Yes, your property values have dropped a bit, but there's probably somebody who is going to be in the more expensive suburb adjoining who now can't afford to buy there either. So I think that's where some of the people who are not property experts like you, but the economists sitting looking at shares and trends are suggesting, borrowing capacity's dropped 25%, so property values will. Doesn't work that way, does it?
It absolutely doesn't. And I think, when you're seeking a property, it becomes a matter of compromise. You find out what your borrowing capacity is, and then you seek the areas that tick the boxes and where you want to live. When you're in a market and you're trying to buy where you've got really strong rates of price growth, that fear of missing out can really drive not great smart decisions. And I think, when you're purchasing in a downturn, obviously you've got to be very mindful in terms of what you purchase the home for. You obviously don't want to move negative equity. But the thing that it gives you is time, because the market is moving at less speed than what it was. And I think that time, you don't have to make as much of a compromise, and there is greater choice on the market. So there are benefits actually of purchasing in a downturn versus purchase in an upswing.
Definitely. So we're talking about the 5 big trends that you're forecasting for 2023. And the first one was that the downturns will be shorter and less severe. The second one is our property markets are going to be fragmented. But that's, and I'm not downplaying your recommendation, your suggestion, because I believe you're true, but I also would suggest that that's normal. What we experienced in 2020 and 21 with all markets growing was unusual. What's your next forecast for 2023?
Interest rates are one of many factors to influence property price. And the number 3 kind of rolls in also to number 4. I think, the speed and scale at which prices soften really do depend upon many factors. And I do think at this period of time, the downturn will be largely shaped by how high interest rates go and how inflation eases. And I think, we saw that jolting impact of the aggressive rate hikes on consumers and the impact that it had on our housing markets over 2022. But I think it's a timely reminder that interest rates aren't the only factor to influence property price. There are many things such as tax settings, banking regulation, income growth, population growth, and also the responsiveness of new supply to the demand that's in the market. So I think, it's about those other factors that drive our property market, not just interest rates. One of the key things, and this rolls on to our point number 4, immigration. Immigration and population growth is going to be a key trend to watch in 2023.
Well, supply and demand is one of the big factors affecting property values. In fact, values of all commodities. But I think what you said is really important for people to recognise, because a lot of those who predicted a property market crash this year only factored in interest rates. And if all else was equal, yes, interest rates would have been the factor making our property markets go down. But all other factors aren't equal. There are all those others involved as well, including consumer confidence and supply and demand. And we know there's a huge undersupply of properties. Just look at vacancy rates that you report regularly on Domain. Look at rising rents that you regularly report on Domain. And where are all those overseas immigrants, long-term and short-term, going to live, Nicola? They don't bring a house with them to Australia, do they?
They absolutely don't. And when you've got, as part of the budget, the Australian government increasing the quota for the permanent migration program to help address that skills shortage that we've currently got, it's essentially the biggest immigration drive Australia is ever going to. That is going to have an impact on housing demand at a time where our rental markets, as you just said, is extremely tight. It's a landlord's market across Australia, interregional Australia, in every single capital city. Now, overseas migration of foreign students do tend to weigh in more heavily on our rental markets because they tend to rent upon arrival. But this will have flow-on impacts into the sales market because it will be a driver for those strategic investors to get active within the market, because rental markets are so tight. We're going to see that boomerang back of overseas migration. And I think, the longer overseas migrants stay in Australia, the more likely they are to make a purchase. That has then flow-on impacts eventually into the sales market.
The problem is that we're not building enough accommodation, and despite the government talking about building more houses, affordable houses in their budget, I'm not sure how that's going to work, and it's not starting for a couple of years' time. The problem is building costs have gone up a lot, haven't they? So despite all these building approvals for large-scale developments, until they're financially viable, until end values increase and developers make a profit, they're not going to take a commercial risk, are they?
Absolutely not. And I think when you've got those supply chain issues, you've got inflation running high, it's very challenging. And I think, there is no quick fix to the supply shortage and the affordability issue across Australia. These are longer term solutions. So when you think about that immigration drive into Australia, that is going to have a sharp and jolting impact on our rental markets initially, which are, it is a rental crisis in many areas across Australia.
Now, you said that our property markets are going to be fragmented. The truth is that some people are still going to be able to afford to buy properties, while others are going to have challenges because of difficulty in servicing their loans. And some first-home buyers are going to have challenges because their rents are going up and the cost of living is going up, so they're going to have difficulty saving. But there are going to be people who are going to be able to afford to because they've got good jobs, good incomes, multiple sources of income. And in my mind, they're going to want to live in the right sort of neighbourhoods. I think one of the things COVID taught us was the importance of neighbourhood, Nicola.
It really did. I mean, when you have a look at the impact that the pandemic had, it created the greatest lifestyle shift that Australia has ever experienced. And it's going to leave a legacy. And I think that is playing that importance not only of our home and how we use it and what we want from the home, but also the community in which it sits. We said this, we were chatting about this at the beginning, livability and paying a premium for being within the right community. It might be a certain street. It might be a certain home. In a downturn, there are always these areas that buck the overall trend. It might be because they're extremely tightly held and people really fight to get into these particular communities. It might be because it's a certain school catchment zone. It might be an area that's gentrifying. It might be because it's just closely connected to everything. I think these are the areas that are going to continue to perform well. And I think one of the interesting things we track is keyword searches. And when you have a look at the top keyword searches that buyers are looking for when searching for a home, it's all these livability factors. You know, it's beach, it's view, it's waterfront, it's pool, but also study. And I think that's really interesting. This hybrid way of working is here to stay. Those that work from home are opting to do that on a part-time basis, if not fully. And in 2021, we saw study coming out as the fourth most popular nationally keyword. In 2022, it rose even further. It came out as number 3.
Isn't that interesting? So people are now looking at changing their lifestyle, location, and the sort of property that they're looking for. So it's been a challenging year, but we've got through 2022 and 2023 is going to bring its challenges as well. Nicola, many years ago, I remember the wise King Solomon had an inscription put on his ring, or I read he did, whether it's true or not, I don't know. And I heard the inscription said, "This too shall pass," to make sure he wasn't too complacent during the boom times or too despondent during the difficult times. And your trends suggest that this too shall pass and good times are going to be ahead in 2023, sometime in 2023. Is that right?
Sometime in 2023, but I think also, you have to look for those opportunities when a market is at a slower pace or it's falling in price. And I think there will be opportunities for certain buyers in 2023, particularly those that have had great equity gain within their homes due to the pandemic boom. So I think it's those buyers really looking for those opportunities.
That makes a lot of sense. So rather than trying to time the market, let's be in the market when the property market bottoms, as it will, so that you can take advantage of the next upside. So if your finances are in order, if you've got a secure job, it's a good time to look at upgrading your home or buying a new property. And hey, if you're looking for a home, what better place to go than domain.com.au? And I appreciate all the research papers that you bring out and that we run on Property Update and that you do in your regular columns on Domain. Nicola, thank you very much, and I look forward to chatting with you again as the year goes on.
Thank you.
Before I share with you my popular mindset message, I'd like to just follow on the thoughts that Dr. Nicola Powell and I were mentioning about it being a great time for those who are in the right financial position to take advantage of the window of opportunity in our property markets. Now, I know it's not an exciting time. You're not hearing in the news that auction clearance rates are booming and that people are making a killing overnight. That's not the way property investment works. In fact, I remember years ago reading about Warren Buffett's comment that somebody's sitting in the shade of a tree today because somebody planted a tree a long time ago. And if you're looking at safely building your financial future and giving yourself more options and choices in life, then maybe it's the right time to have a chat with our team at Metropole to make 2023 a great year for you. Go to metropole.com.au and find out about our range of services, and in particular, have a look at our strategic property plan service. This is as relevant for beginners looking for a time-tested strategy as it is for established investors who could be stuck or maybe just wanting an objective second opinion of your situation. I'll leave a link in the show notes, metropole.com.au. And if you really want to make 2023 the best year ever, why not join us at Wealth Retreat? I'll leave a link for Wealth Retreat in the show notes as well. Wealth Retreat is where we get together with a small group of already successful business people, entrepreneurs and investors, and plan to make the next 5 years of your life 5 years that are going to change your life. Now, don't count yourself out. while it's in general for already very successful people, every year we allow a couple of not as experienced investors in, because that's the sort of information I would have liked to have. By the way, anyone who comes to Wealth Retreat, I chat with them personally to make sure that it's right for you, because I give a money back guarantee. So if you're wanting to safely create intergenerational wealth through property, consider joining us at Wealth Retreat 2023 in April. I look forward to being part of your ongoing wealth creation journey.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In today's Mindset Moment, I'd like to share with you the big difference between winners and losers. Over the years, I've had the privilege of working with some very successful property investors, business people and entrepreneurs. And I've also met some not so successful people. And I've found that in general, people fall into one of two groups: those who make excuses and those who don't. The ones who make excuses, look, they don't start that way. No one's born talented at making excuses, but over the years, they've learned to get out of things. They've learned to blame the economy, their parents, their teachers, the system, I don't know, pretty much anything they can deflect the blame on, because this gives them the excuse that they need. And then there are those people, the other group of people, who don't, or rather won't, make excuses. We all have our difficulties, and some days we feel like making excuses. But winners stop themselves. They don't make excuses. They just get the job done. Interestingly, we all have similar capabilities. Yes, we've got similar capabilities to get things done or not, or to make excuses about it or not. When you wake up in the morning, you get to choose. You get to choose which route you take. Now, I recently read this insightful quote. I think it brings it home. The difference between successful people and unsuccessful people is that smart people hate doing the same thing that unsuccessful people hate doing. But the successful people just do it anyway. Interesting. We all hate doing those things we don't like doing, but successful people do it anyway. So as you go on this journey that we call life, you're going to get the chance to back out and make excuses or not. You've got a choice. You decide. Well, thanks for spending the last little while with me, and I hope you got some benefit from this show. If you did, and you know somebody else who'd also benefit, please tell them about the Michael Yardney podcast. There's a share button on every podcast app. On Apple Podcasts, there's 3 little buttons down the bottom. Press it and share it, or just tell them about the Michael Yardney podcast. I hope you're going to be doing them a favour, and you'll definitely be doing me a favour and helping me in my quest to make as many people as possible financially literate. Now, there's ways of catching up with me between these shows. Just look for Michael Yardney on social media, or why not join my private Facebook group? Go to Facebook and look for the Property Update Facebook group. And I have a way of saying thank you to you for subscribing to this podcast. Go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where you can get a bunch of ebooks and reports. My way of saying thank you. And when you've got time, why not listen to some of the old podcasts? There's individual lessons in each of those that I think would be helpful for you. I'll be back again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favorite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?